Good afternoon, everybody. This is Dennis Wilburn and David Grandy. Dennis is from the Active Trend Traders at activetrendtrading.com, and David is with All About Trends at allabouttrends.com. How you doing today, Dave?
I'm doing well. I can't complain. It's actually allabouttrends.net. But
oh, excuse me.
That's okay. No worries.
Thank you. I did that on purpose so that you could reemphasize what it really is.
Sure.
Okay. And so I want to welcome everybody on the webinar this afternoon. We really appreciate you turning out. Just get a quick, brief overview of what's happened in the market this week. Exciting times in the market this week, huh, David?
It's been another week of fun and games, yeah.
It has. And I want to remind everybody that, one, the material we present here is for training purposes only, and that all traders should paper trade any new method prior to risking their own personal capital. I know that I'm a big proponent of paper trading. I still paper trade after trading for decades. I still practice my craft. Today we're really excited. Dave, anything new going on over at allabouttrends.net?
It's been a very exciting week. We launched a new website, mobile compatible, and kind of a new look and feel, and we're pretty excited about that. Same functionality as the other site, but just looks better and easier to access. So we're excited about that. We did one short sell trade and locked in gains on that, and just today, and we just issued a trade alert on 3 other stocks. So it's been a pretty fun week.
Awesome. And I did check out your new website, and it is really nice. I like it a lot.
Thanks. Well, how about you? What's going on with Active Trend Traders?
Well, the Active Trend Traders, I've also taken this time in the market while it's on the downside to take some time off, but I've been regrouping. We're going to be doing a couple of things. One, we're refining the newsletter we send out, the Art and Science of Active Trend Trading. We're going to be offering 2 different versions in the near future. And then secondly, I've been working on a curriculum type offering of getting started with active trend trading, where people can basically come in for some classes on how to specifically trade the system, which is something that we've shown over the last few years has been a very successful system. And which leads me to my kind of the first slide today, David, is the elements of all good trading and investing systems. Is one, they show us a few things. They show us what to trade, and I know you guys offer up some really good quality stocks. They show you where to enter with entry action points, when to exit with exit action points, and then what strategy to apply that to help to use to minimize your risk and maximize profits. I know that reading your newsletter, Dave, you guys always talk a lot about minimizing risk, maximizing profits.
Exactly. That's the key. We're not trying to hit a home run every time. We're just trying to consistently make money through the trades we do, and by having a sound buy rules, sound stop loss levels, and sound places to take profits.
Okay. So what was your kind of like overall thoughts about the market this week? Did you see anything constructive at all?
Well, big picture, it was more of the same, and this is like the 4th consecutive week, I think, that we closed at the low of the week, and we still have these days where you wake up and the Nasdaq's down 100 points in 30 minutes. So we still see sellers very much in control. However, as we'll get into in a little bit, we are at a point here where it would be very reasonable to expect some sort of a bounce here.
Yeah.
Because we're at various support levels on both indexes. So.
Yeah, we'll be seeing those charts here shortly. Yeah, I'd say we're kind of at a critical juncture. These big, huge, where we're up several hundred, 100 plus points on the Dow or the NASDAQ in a day, and then the following day you're down 150 points or more, continue to the downside. My thoughts about the market for the week were basically summed up in 4 words: damage, carnage, and no capitulation yet. I guess that's 6 words. That's kind of what I was seeing. But I wanted to share 2 indicators that I look at when the market is in correction to help me get a better feel for how oversold the market is, and also how does it appear to be looking for a bottom. And my research partner and I spent several years pulling together the active trend trading system, but we found 2 indicators that I don't know if you guys have seen them or not, but we find them very valuable. The first of them, and I've just imported this, it's called the percentage of stocks above their 20-day moving average, and this is based on stocks in the NYSE. NYSE, that's correct. And I want to highlight a couple of points, and it tends to work better with when stocks are coming off the bottom. However, it's an indicator, and you can see that there's these 2 levels. There's a support, there's a level of resistance up here about 80, and then there's a level of support down here in the 25 range. And what we found was, and you can go and you can find these charts, and it's a free at barchart.com and under the momentum studies. But every time the significance of being oversold back in, this would be latter part of June 2013, August, first part of September 2013, again in October 2013, a little bit of a low here, but every time it gets way over, sold in these areas, February of this year, there is a rebound tendency. I'm not going to say that the market's going to go right back up into a huge new uptrend immediately, but we are, here's the results for today. We have entered that lower, what we'll call a reversal zone, and so it would make sense that the market should look for some levels of, the indices should look for some levels of support to potentially bounce off of. Does that mean it's going to go right back up into an uptrend? Not necessarily, but it might be a good place to, it's not a great time to actually go short unless you were already short. The other, there we go. The other chart, and the other is just a specific chart, and I've got the S&P up on this chart, and what is the McClellan oscillator? And I don't know if you're familiar with McClellan oscillator, but it was developed back in the 1990s, and it also is developed off the NYSE, and what it measures is the number of stocks that are going up versus the number of stocks going down. It does some calculations, but it provides a really good indication of the internals to the market and the market's strength and weakness. And whenever it gets down in the around the 200, negative 200 level, it tends to do a bounce. Is it right on every time? Not necessarily, but it does do a pretty good job when it bounces and comes back up. And it really is a beneficial indicator in some of these areas where if it drops below the 200, an upswing is typically in the offing pretty quickly. And if we go back in time, oh, my circles moved too. Let me get rid of the circles here. There we go. If we go back in time and just look at this, is that when it gets in the oversold, way oversold, below 200, it tends to bounce up. When it gets in the above, 200 to 300 level on the top, again, it doesn't seem to be as accurate as predicting the tops, but the patterns that it does provide, provide a pretty good indication of some topping action. And as you can look, if we run back here to when was the last real major, here's a major, well, this is back in 2010 we had some of these major sell-offs. We reached a new low, we got another sell-off here, but then we actually got a double bottom on the McClellan, which then led to the initial uptrend. But then the other thing I like about it is you can also look for the positive and negative divergence. Very nice negative positive divergence. Makes a new low, and away it goes, and then starts into its new uptrend in 2010 that was very profitable. But it's something worth taking. If you've never taken a look at both these indicators, there's something that I always check when the market goes into correction. How oversold are we getting? Are we at extremes yet? And that's where to pay attention to it. So with that, I'll just run right into the market. The S&P, the long-awaited wait of this support line at about the 1840 level. It has now dropped to the 50, and there was a big write-up about the S&P has finally dropped to 50, but now it's showing the weakness that the NASDAQ and the Russell were showing before it. We also have a close below the 100-day moving average, but we're coming really close to this uptrending channel. Will it stop here, or will it proceed on down to the 200-day moving average, which will approximately correspond to this level of support from this previous swing low? I will point out one thing on the other charts, and we were talking about this last week, David. Remember, I mentioned that there was a shooting star type pattern where the S&P had run up really hard week before last, but then finished in this negative type candle. And sure enough, as soon as it broke the low there, it is just the carnage began for the week. Let's take a look at the comp real quick. The NASDAQ has continued to show even greater weakness than the S&P. It did one of these little wedge ups that we talked about earlier on Tuesday, Wednesday, Thursday, and Friday. It is sold off. The one positive for both this and I believe the S&P that I know you're going to talk. Oops, I know you're going to talk about it shortly, David. Is that I will point out the not on the S&P, but on both the composite. We have what's basically called an inverted hammer. And the inverted hammer can be looked at as a potential bullish signal where it can point out that there could be a bounce in the very near future. If it breaks the low here and breaks this low, then we're probably going to retest about the 200 is what I'm seeing. And finally, the Russell. The Russell almost made it to its 200-day moving average today. And that's not supposed to be there. Okay. It almost made it to its 200-day moving average today. Which is 200-day is going to continue up. It's still in a longer-term uptrend. However, it is continuing to look weak. It did drop the 78% retracement on the Fibonacci's. So 100% retracement, which would be down in this level, is not something that would be unreasonable. Although it does have to get through this support here at the 200. So going into next week, as you said, David, maybe another good, we may get a little bit of a bounce off the support of the moving averages, and then we'll run right back into resistance at the other moving averages and or this upward trending line. So that's what I'm seeing for the markets. David, what about particular stocks? I'm going to turn it over to you.
Okay, so just give you some quick highlights. not a whole lot changed this week. You know, on the big picture thing, you know, we still saw a lot of selling, and that we still had you know, the Nasdaq rally for a couple of days, and then boom, right back down, and then some, made another lower low. This time the S&P broke down too, but as Dennis was saying, and I'm going to show it here in a minute too, we are looking at a major support level here with the 200-day not too far behind. So, and we're starting to see some more setups on the long side than we are the short side. And we talked about that last week, that there really wasn't anything really setting up on either side of the market. And there's still not a whole lot, but there's more setting up on the long side now than on the short side. So let's quickly go through the indexes here. You can see the Nasdaq is came down, hit this blue line, and that's where we closed near it today. We'll see if we get a bounce off that. It wouldn't be unreasonable to see that. The 200-day is right here as well, and we're very, very oversold. So we're in, you know, we talk All About Trends a lot about being in the zone, and you could call us in the zone here. Same thing with the S&P, broke the 50-day, but you can see there's multiple Fibonacci levels here. 61.8 is the next one, and we have the trend line that Dennis was talking about, not too far away either, and very oversold. So that's what we're looking to look for next week. We're going to look for a bounce here, an oversold bounce, and as a result, we have some trades, and I stress trades, you know, to take advantage of the potential upcoming bounce here. So when we're looking at stocks that are still in uptrends, and we're thinking the market's going to move higher, there's two things we look for. One is the pullback off highs patterns, stocks that are still above the 50-day, still in confirmed uptrends, that have pulled back in an orderly manner to the 50-day or some area of support. In this market, it's a little bit, you got to give stocks a little bit more room. Either not all of them are going to hold the 50-day, but just because they don't hold the 50-day doesn't mean that major support is right there too. As you can take a look here at Zulily, it did break the 50-day, but look where it's sitting. It's got a nice little mini double bottom here off of the blue line, which was a prior breakout level. So, and it's obviously way oversold. So we're going to look for it to bounce here, and a break above the pink line triggers our trade to the long side. The other thing we use to buy stocks are trend lines, stocks that have pulled back. So when a stock's in an uptrend, it forms a trend line that you can draw, you know, along the lows of the stock's uptrend, and the stock can be bought when it pulls back to the trend line and then bounces off of that. And Tesla, again, below the 50-day, but still in an overall uptrend as defined by the trend line, and you can see it's, you know, hit here, and bounced, and here we are now again, and it's also corresponding with the Fibonacci level. So you know, you can say Tesla's in the zone here. What we'd like to see is a high volume move off of this trend line here. Shorting, well, you know, the market's come down quite a bit, and we're near support, so you're kind of late to the game now. The markets are very, very short-term oversold, and short sell patterns out there just isn't a whole lot. We need to see this bounce happen in the indexes, which will hopefully bring leading stocks that have broken down back up to areas of resistance, and then at that point we'll look to take them on the short side. But we need to see them rally along with the indexes here in order for those setups to be complete. So what do we do now? Not a whole lot different than last week. It's just kind of, if you really got a trade, there are some patterns out there, not many, but really the best thing to do is just wait and be patient, let more patterns set up. As I said last week, the best time to get back into a market is when there's an abundance of good quality setups in, and we're just not seeing that yet. But we're getting there, and you know, hopefully we'll get a real nice bounce here, and that'll complete some good short sell setups for us. So if you got another project or something to do, it's a good time to do it. Otherwise, you know, just stay tuned here as the market moves. We'll have more setups we'll be presenting. I actually have quite a few more setups than I presented today that you can check out if you want to take a look at our site. We have a 15-day free trial, and if you sign up for that, you can get all the setups that we're currently looking at, and we'll probably be trading off of next week. We did do 3 new trades today on the long side, so you can check all that out by signing up for the trial. That's about all I have.
Okay, David, thanks. I just want to, show a couple of charts that were very interesting to me this week. Let me show my screen. There we go. A couple that I know that you had been tracking previously over the last couple of weeks, or one of them you've been tracking, which was the, let me make sure I get the right one. That looks good. Which was MasterCard. MasterCard actually did a real nice breakdown after, and this is something to look at, guys, is it came back up to the old resistance of when it put in this previous little flag coming up here that failed to the downside, came right back up to that resistance, and then the last 2 days have been dramatic downside for MasterCard. And I think this gives a great example, Dave, of if you wait for the proper point and define your action point where you're going to take action, it can be very rewarding.
Exactly. I mean, that's really the best way to do it. I think I said last week the fastest way to lose money in the market is to trade for trading's sake and feel like you have to do something because you're afraid you're gonna miss something. And the harder thing, but the more profitable way, is to be patient and wait for setups to complete themselves and wait for them to trigger, and then you take them as they trigger, and the odds are much better in your favor.
Yeah, I agree wholeheartedly. And here's one of the other ones that I have been trading over the last couple of weeks. And sometimes I'll get it with a stock, and I'll stay with it for several weeks and just trade it 3, 4, 5 days in one direction, and then let it tell me when it wants to go back in the other direction. And this week there was 2 really nice little moves on Qihoo, which was first one was the bounce off on Monday, the bounce off the 200-day moving average, runs all the way back up. But then as soon as it fails right here at the 100-day moving average yesterday, that was an excellent opportunity because what's going on? The overall trend is down, and the moving averages had all crossed over, which was telling us it's in a downtrend. And so this little bounce up trade on pretty good volume, but then it could not resist the market. But for all those who've been watching the active trend trading stuff, look what it does when it hits right there at the 200-day moving average, and this double clue of horizontal support at 83.92. It stops almost dead in the water and at least doesn't go any further down than that. So those are the kind of clues that I like to look for, David, when I'm planning my trades.
Yeah, earlier this week we put out a special report to our members about the 200-day moving average and kingpin stocks like Netflix and stuff, and what typically happens when a leading stock crashes through initial support and then ends up touching the 200-day. You typically see a really nice bounce off of that, and that usually is where they bottom out around 200 days. So, again, we're kind of at an inflection point here where it's make or break time on the indexes, and many leading stocks are at or near the 200-day. So it's we'll see what the market and these stocks are made of next week.
And David, I agree. And the other day, Dave online wants to know, do I have any write-up about the TOS study sets you have shown on the screen? Dave, if you will just shoot me an email, I will be glad to send you my study sets off of my Thinkorswim stock charts. And so, guys, just want to thank everybody for joining us today. We're going to go into some question and answers now. But you can here's the slide for where you can contact Dave. And then at the bottom of the slide is where you can contact me. I know Dave likes to get emails, and he's very responsive. And I'm really glad to be teaming up with him so that we can, one, give this little webinar on Fridays to give you an idea of what happened in the market and what to plan for next week. Personally, I'm planning for potentially a small bounce, but I'm not going to be all in. I may start nibbling a little bit, but I will not go in until a new uptrend proves itself. How about you, Dave?
Yeah, definitely. I mean, like I said, I would like to see more patterns where it's a lot more obvious, where things are headed, So right now there's definitely some trades out there, but real short term, probing positions only. We're not going to go through everything we got at this stuff right now.
Yeah. So, okay, Bruce, we'll get to that. GLD and. Dave, did you get, I'll tell you what, David, do you have your charts up?
I don't, but I can.
Okay. So, folks, hold on, and we're going to start answering questions about specific stocks. And again, thanks for joining us today.